It's the IPO the world's been waiting for, and now we're just 24 hours away from Facebook's first day of trading. The world's biggest social network site has increased the price range for shares, pushing the company's valuation up to as much as $104 billion. But at that price, would the Facebook stock be a good investment? Well, joining me now to talk about it is our digital media correspondent, Tim Bradshaw. Tim, investor sentiment has been varied this week, but we've got heavy demand from retail investors. Is that simply because Facebook is a part of everybody's life? It was a Hollywood movie, of course, and that people want a piece of it regardless of the valuation?
Exactly. I mean, quite often people like investing in something that they think they understand firsthand. So, and Facebook has 900 million people using it. A lot of people feel like it's a business that they understand and that they love, and that they want to own a part of. I think it's certainly an indication that people buying into Facebook, the phenomenon, as much, if not more than Facebook, the business. But it's it's definitely helped to push the price up and that valuation up to above where certainly some commentators thought would never have been possible for a public listing for this company.
But some of Facebook's earliest backers are now selling their stock to meet the increase in demand. Is that a concern, do you think?
Facebook could have chosen to sell more of the company without having to call on existing investors to sell down their stock. It's interesting that as we've got to that 100 billion mark, some of the early investors, as you say, have decided to take profits at that point. They're obviously sitting on huge returns already, so to some extent, who can blame them? But it is a bit of a sort of counterweight to the very positive demand that we've seen from new investors who are going to be buying in at a pretty punchy valuation at this stage.
And when you look at that punchy valuation of anything around $100 billion, I mean, are there concerns it won't be a good investment?
It certainly leaves Facebook a lot to prove. I think we will probably still see hostage to fortune on this one always, but we could still see a decent pop when Facebook does actually go public. Even above that, certainly I know sort of bookmakers are offering reasonably good odds on it getting even higher on opening day. But it's really what happens after that. I think the kind of longer term basis, people are kind of looking at this valuation on what Facebook could do in 3, 5, 10 years time and betting that it really is the new Google and that it can make money from all of those 900 million people rather than looking at what its advertising or its payments business is really worth today.
And what are those longer term challenges or indeed opportunities that could make this valuation make more sense or indeed drag it back down to earth?
Yeah, it's very interesting. The two big areas for me that are really interesting are Facebook's mobile strategy and also its expansion in emerging markets. And as you say, you can view those either way. They're both areas where Facebook is not making a lot of money at the moment. In fact, some of the most enthusiastic countries that have adopted Facebook, places like Turkey and Indonesia, are places where online advertising spending is really tiny, so they're not making a lot of money from those users, and that's where a lot of their growth is going to be coming from, because frankly America and parts of Western Europe are already pretty well saturated in terms of usage. The mobile side of things is particularly interesting because obviously Facebook made this $1 billion acquisition of Instagram. That was seen as a little bit of an admission of weakness on their mobile front. They were worried that competitors might sort of pull the rug out from under them, but you just can't show as many ads on a mobile phone as you can on a full-size PC screen. So they've made several warnings. They've been very upfront in their IPO filings that this was an area where they'd still not quite figured things out.
Now, final thought, Tim, just briefly. You mentioned Google just now. Do you think that there are any similarities that investors can draw between the Facebook IPO and the Google offering back in 2004?
There's some big similarities in that it was a huge hype around the IPO. It was seen as a big moment, particularly when Google went public, for sort of getting the sort of dot-com crash behind Silicon Valley and sort of opening a door for a new wave of tech firms. I think there was also a lot of skepticism back then as to whether Google could really justify its valuation, but the way that it conducted the float was very different, and the way that it actually, in the days leading up to Google's float, the investors actually sort of were getting slightly more cautious, and the book running was being pulled back slightly. So the day that Google floated was not a sort of gargantuan pop and huge spike, but obviously over the subsequent few years it's gone on to increase several fold. So Facebook is actually running a much more traditional IPO. It's not doing this auction model that Google did. It looks as though the sort of huge anticipation is going to kind of push those shares up quite high on opening day, but that leaves a huge question for how much more there is left to run over the next few years, and it's really the kind of long-term question. We may or may not learn a lot about what investors really think about Facebook until this time next year.
Okay, on that note, Tim, we'll have to leave it there. Thank you very much indeed. Plenty more analysis of the Facebook IPO at ft.com/Facebook.